those are some trends that I think are really fascinating that kind of underpin my view of like why I think we're not in a bear market per se. I mean, I don't know what prices are going to do in the short term, but things are pretty good in crypto right now.
Welcome back, Sebastian. It's been, well, about a month, right?
Sometimes a month can feel like a year.
Well, look, based on what we've seen in crypto this past month, it feels like an eternity. So let's address the elephant in the room real quick, Sebastian. You obviously put out the monthly report, which we'll go over here in a few minutes, which defines really what the state of the crypto markets. But I want to talk about what's happening right now in crypto. We're getting all this bullish news about Bitcoin and Treasury and stablecoins adoptions. And now Jamie Dimon's talking about how you can now, every bank should be using stablecoins or try to get acclimated with stablecoins. The news couldn't be any more bullish, but the price does not reflect that. What do you think is happening?
Yeah, well, I mean, there's amidst all like the bullish headlines, there's some like also some pretty bearish ones with respect like the government, U.S. government has been shut down for coming on like near like a couple months here, but I guess like 40 days or something like that, right? But still, like there's some headwinds in the market that we also have to work through, and I think while there are some reasons for the liquidity to be flowing into the ecosystem. Inflation is kind of, people remember what happened, in 2021, 2022, 2023 for crypto. And so it's like, well, yeah, and other, interest rate sensitive assets. So it's like, okay, well, like is inflation, what is the situation there? Like what's going on? So there's like a really, kind of like bipolar economic indications too, with respect to like strength and weakness that I think people are trying to wrestle through geopolitical stress, and asset prices are all at all-time highs, right? So it's a tricky environment to navigate, but um, you know I'll say this, and then we can kind of get into some of the charts. But like, there's a good book out there called "The Psychology of Money" by Morgan Housel, and this stuff is generally good to read, I think. And that one in particular is really good. Like, crypto is still pretty nascent, so it's very difficult to try to find compounders. There are some, but I do think the whole like kind of cliche of time in the market is better than trying to time the market. With crypto's volatility, you could say that like, no, it's like you definitely want to still be trading this thing around. It's really inefficient, and I get that. But I think like, I believe what we were saying with respect to some of the bullish headlines, that's kind of paving the way for this kind of like secular growth trend over time. And if you zoom out, it'll be like, oh wow, things are really going to be awesome. But in the short term, you get this volatility and people with like, 100x leverage and all that kind of stuff like that. Like that really amplifies emotion in the media, which we see all the time, and then also can kind of play its way into charts. That said, we have obviously had a lot of volatility, and so I get that can kind of be discomforting to people, but generally speaking, I kind of remain of the opinion that the trends broadly are still very supportive for the asset class.
There are people that believe that no matter what, there's a 4-year cycle, and no matter what, that cycle ends end of the year. And it's not just for Bitcoin. If you go back in history, you look at the S&P 500, it's also a yearly, or I should say a 4-year cycle. There's times where it deviates from that, but all in all, Bitcoin is also related to S&P in terms of like the correlation. And so they're saying that no matter what happens with Bitcoin, bottom line, at the end of the year, it's, we hit our all-time high. So there's that argument. And then there are those that are saying that the news with the rate cuts is just, way too bullish. The adoption that's happening is just too many things happening for us to just end it here. And most likely that will go into 2026 with some of this like momentum coming back. Which one would you lean more towards?
Yeah, I mean, like for me anyways, I don't really like buy calendar cycles as like a as a like an important kind of like anchor in my kind of view of how things are. I mean, yeah, I don't think there's much predictive power there. Maybe like maybe in the past with Bitcoin being much smaller and closely held and the halving and what that meant for supply demand and that kind of stuff like that could have played a bigger part of it, but now it's more of like a liquidity driven asset tied more to business cycles, which you know vary considerably in timeline. So I don't think, just for be like, oh, that's the 4 year cycle. We got to like, rotate out now is the way to go. I do think that some people think that way, but I mean, some people trade on horoscopes and stuff like that too. So, I mean, it's up
Or
to
the
them. And
moon.
like, look, like, again, like, I'll say I'm not a great trader. I like to play trends for longer periods of time. And so if people, think they have an edge by trading lunar cycles and stuff like that, then power to them. I personally, have seen evidence to the contrary, and position myself accordingly. But no knocking against anyone who wants to trade calendar cycles or farmers almanacs or anything else like that.
All right. So basically, you're kind of more along the lines of Raoul Paul, who, also thinks that most likely, once the liquidity comes back based on better market conditions because of the quantitative easing, that things will be rocking and rolling again. Okay. So now let's transition a little bit more to the state of the markets report that you put together on a monthly basis. Now, given that this is looking back 1 month, I mean, I think it's still great because it'll give us an opportunity to kind of see what's coming down the pike here, things that maybe we're missing, and give us a sneak peek potentially into what to expect this month and also moving forward. What are some of the things that really stood out to you when you were putting this report together?
Yeah, I mean, I think there's like kind of three, or like maybe a few different kind of things that I thought stood out. Like there's a pretty big divergence in kind of risk assets. Crypto was very weak in October, while like equities and gold were higher. I think that the sell off in on October 10th was very meaningful, and we can talk about that. I think we saw an ongoing trend of crypto entering, like continuing to mesh closely more closer with the banking system, the fintech kind of architect ecosystem as well. I think there's an emphasis for real businesses that are being built on chain, and a lot of like revenue generation, which is really awesome. And then I think the reality is that if you're gonna have a token trading out there, you have supply demand kind of imbalances that you have to fight against. That's very important to consider when trying to invest or trade tokens, and then also try to work something like that into your project's architecture. So yeah, those are the big things, and they're kind of lasting beyond just the months. Every once of course I'll flag some stuff I think that stands out on a month to month basis, that maybe like plays into those trends, but those are the major ones that I'm kind of focusing on.
Yeah, the amount of tokens in the system, it's getting pretty ridiculous. And look, I guess it wouldn't be so ridiculous if we had the liquidity to back that up, right? But we don't have the liquidity, and we just have like so much of the supply out there, and it's just creating a lot of issues. So let's jump into some of these data points that you put together. What's the first one you would like to cover?
Yeah, so I guess like the just the by and large, it was like, crypto, Bitcoin was down 4%, Ethereum was down 7.5%, and Solana was down 11. Meanwhile, gold was up almost 4%, the S&P was up 2.5%, and Nasdaq was up 5%. So like those are pretty meaningful divergences in what's going on in the markets. It could be that crypto was acting first, right? I think it's you gotta be careful about trying to like read it to any one day, but crypto was really weak, and then since then the stock market's kind of been a little bit weaker, and now crypto's kind of picking up and the stock market's down again. So maybe it just moved first. As a smaller kind of more nascent asset class, it's easier to reflect those kind of those symptoms. And people have called Bitcoin the fastest horse in the race in the past. So it picked up before some other assets did after the Fed rate tightening cycle kind of suppressed assets a few years ago. So that could be what's going on. It's hard to say, but I mean, it is meaningful if like you get these kind of big divergences. I think a big part of that came from the liquidation of impact on October 10th. So slide 4 is pretty good as a, it's just one picture that kind of talks about what happened there. But like, I think there was a lot. We'll see what ends up happening. Like, I'm not an expert in what happened on October 10th with the liquidity crisis, but I think, it really goes to show that these are nascent markets. There's no circuit breakers. There's no Fed. There's no, the president's not kind of coming, like jawbone the crypto markets or whatever else, like he will the stock market, just because it's less relevant for most people, right? And so you have a lot more volatility, and you get some experiments that maybe prove, show their vulnerabilities when you have instances like that. But pretty pretty interesting. Obviously the market was pretty highly levered. You get a potential red flag with respect to some comments out of the White House, and then just a complete onslaught. And that was a wild one. Like, there's been tons of podcasts that have talked about it and tried to do postmortems on it, so we won't dig too much into it. But I do think it's pretty meaningful just to see, there was some interesting market structure kind of takeaways there, right? Like Athena depegging very meaningfully on some centralized exchanges, but then not so on Chainlink is like, oh, what's going on here? Them being able to process redemptions or supply or mint burns or whatever else kind of flawlessly, and making money kind of the whole way through is really interesting. So I think, like the market structure of crypto is kind of getting built largely without regulatory oversight, largely without kind of like centralized planning that you would get, within like a country's stock market kind of, that you just don't really have here. You've got a bunch of different projects doing stuff at once. And so, yeah, really, really interesting to see what happened. I think ultimately, you don't probably just bounce back hard from something like that. It takes a little while for sentiment to get rebuilt, maybe risk appetite to come back when people are worried for like a second leg lower, so on and so forth. But I think if we use Athena as a kind of corollary here, right? And again, I don't know like if there's skeletons in the closets or whatever else. I'm gonna assume there isn't, but violent depeg and then now resumes. Business model is pretty well tested. They, and here we drive on. And I think that's a decent kind of like read through for crypto more broadly, right? Like, yeah, some projects, saw their token prices get destroyed. Some have bounced back versus others. And a lot of traders got wiped out on leverage, but that's the risk you take when you add leverage to your books. But otherwise, I think, projects like Liquid, proved themselves to be fairly resilient. Of course, maybe with some asterisks there, but by and large, I think that was pretty pretty impressive. Even centralized exchanges too, right? Like, whether or not you got liquidated or whatever else. Like, I think at the end of the day, at least my operating assumption is if you have leverage, you can get liquidated, and like if you think you're doing that properly or prudently or whatever else, like that's fine. But like, the zero outcome is part of the distribution, and you just have to manage that. And so I don't know that it's fair for people to be like, oh, what's going on here? Like, it's just a risk you have to bear. Could there be some stuff there that makes you, less, unhappy? Yeah. But at the same time, like that's a risk that you bore when you add a leverage to your books. So I think, people should be mindful of that as they look to layer on leverage.
19 billion wiped out, Sebastian. And from what I understand, it's the largest in history, which sounds like a lot, but I also think about like the industry has evolved, it's grown. And so 19 billion, of course, I mean, that number is going to increase only with time. So I think the better number to know, and I don't have this off the top of my head, is the percentage of the overall market cap, right? What's the size of the market relative to that 19 billion? I think that is a little bit more impactful in terms of percentage. But yeah, 19 billion as it stands, as it's been recorded, was wiped out. And during that phase, the other thing that I noticed is certain crypto was doing okay. Like Binance had a run, Astar had a run, and now Zcash. Like Zcash is completely defying the odds. And I don't know if you have anything, because this is obviously from a previous month, but like, what do you think is going on with Zcash?
I mean, like there's a privacy meta there. I think there's eyeballs on it, and like it's momentum, right? Like I think if you have there's probably a lot of momentum trading algorithms that are operating in crypto, and you're looking for what's working. And so, like I remember a few years back, I was at a like some sort of annual dinner or whatever else, and there was the head of quant trading for BlackRock there, and she kind of explained how they have like 2,600 positions in their portfolio, and like if the portfolio optimizer says you have to make certain changes, they just make the changes. They don't care. They just move on. And like they're not worried about like, oh, but it's down this much, we should, hold on. Or like, oh, but wait, like there's this like nuance to to what they said in their quarterly report or whatever else. They're just like, no, moving on. Like it's part of a different kind of strategy. And so I think for something like a Zcash, and like, crypto algorithms would probably, or algorithms that are looking for things on chain are probably like, what's working? Oh, Zcash. Okay, so then more capital goes there, and they can kind of like play the game until it doesn't. Which I think is a pretty meaningful part of market structure overall. Without no, I have no quantitative evidence to that, except for it just seems like that's how you see kind of things rolling out in crypto charts.
Yeah, some people are calling for 3,000. Some people are calling for 10,000 Zcash. I mean, based on the market conditions, I mean, do you see this potentially continuing to gain momentum?
I mean, momentum trading is kind of like that, right? It's like if it's going up, people keep buying, and if it breaks its trend, then people start selling. So it's possible. It's with things like that. I mean, me personally, like it's not something that I'm like, oh, I'm gonna rush out and buy a bunch of Zcash or whatever today. But like, again, I think like it's different lenses on the market are different, right? I mean, like if I try to say I'm looking for like kind of compound assets or whatever else, then I look at things a certain way, and what I'm interested in might not be interesting to momentum bots or whatever it might be, right? Like it's certainly nice when if you have an asset that gets picked up by the momentum traders, that helps. I mean, on the upside, but yeah, I don't know. It's hard to say. I don't have a thought on a price target.
Anything in your report that shows anything about like the overall strategy changing, like perhaps maybe some de-risking that's happening in the market, perhaps maybe some of like the DeFi protocols gaining momentum because they just want to like park their stable coins and earn yield? I know that's a very common strategy once we get into like the bear market. Anything of that nature that you've seen in your report?
This month I didn't flag any of that kind of activity. When you have such a violent movement like you did at the beginning of the month, things start to, you kind of have to just wait for the dust to settle on some stuff. So my emphasis this month was a little bit more zoomed out by design. I think if you were to look at any given indicator, right after the like for the couple weeks after the 10th, things are going to be a bit wonky just because it was such a big move that like it's hard to kind of read much into those moves. And so I'm more focused on like the secular trends, and a lot of those are kind of like this like some like increasing demand for crypto assets. I think that the ETFs were just like an amazing demonstration of what that looks like. And I think if you look at like the Bitcoin and ETH ETFs owned by, or assets owned by ETFs,
Which page?
oh, it's not on there.
Okay.
It's not on there. I'm just going to talk about it.
Sure.
As I said, like I think this month I decided not to like emphasize that too much, because most of the time series that followed September or October 10th were super volatile. So it's like, okay, well, hold on. Like I don't want to like try to like pick a trend that's going to come from that right afterwards. A lot of the time, in my experience, the best things to do after something like that are just be like, okay, well, hold on, wait and see. Like if from my perspective as a long only type of person, I might try to like buy some stuff on the really cheap, but otherwise it's like, okay, I'm just going to wait, and see what kind of ripples that happen. And if you look at the Bitcoin owned by ETFs or Ethereum owned by ETFs, it did bounce around a lot after the big sell off on the 10th. Now I think the point I'm trying to make is that we'll see, right? Like, I mean, maybe this leads into something bigger and things pull back in a big way, but zooming out, if you did like a moving average, you don't notice it. And it's still that nice trend upwards. And that's kind of what I'm kind of alluding to, is that, like, you know, the ETH owned by ETFs and Bitcoin owned by ETFs both have kind of, like, you know, rounded out. Now, do they fall? Hard to say. We'll have to see. I don't have any indication saying that they're going to do that meaningfully, but, like, you know, they've kind of held on. And so I think that's a, you know, reason to believe, at least for now, that these trends are still intact. So, you know, spot numbers there, ETFs still own about 6.5 million ETH. And that's the same as it was in kind of like August there. Most of August and September is kind of trending around that area with a little bit of bouncing at the top here. So we'll see, like, whether we inflect higher. And then for Bitcoin, it's 1.34 million. And that's meaningfully higher than it was in September. So, you know, in September, that was kind of like, you know, 1.3. Now it's 1.30, 1.34. So we're still a little bit higher. And so, all that to say is, like, you haven't seen this like vast exodus from ETH ETFs or whatever else with respect to, like, you know, redemptions. And I think that that's, you know, one example of what I mean by, like, you know, the trends seem to be still looking pretty good. But if you were to look at the chart of the Bitcoin or ETH owned by ETFs, they did bounce around a lot after that sell off, which you'd kind of expect. That insane move that wiped a lot of leverage, set a lot of, like, profit loss books and stuff like that, and probably resulted in some pretty healthy losses for some folks. And so, you know, you kind of just got to wait and see what happens for a little bit and then kind of go from there. Like, you know, could you make the argument that crypto's going to, like, enter into like another bear market here or whatever else? Probably you could. That's not my baseline assumption. I actually think that these trends are gonna continue on based on some of the things that I put in the charts in this month's presentation.
Interesting, yeah, because there's people that are saying, look, we essentially topped out the same point in the cycle, like previous cycles. So if it's not broken, don't fix it. But I still think that this cycle is unlike any other because, I mean, we didn't get that altcoin season that everyone was anticipating. And a lot of that has to do with the fact that we've delayed that quantitative easing that we've had in the previous cycles. But yeah, let's jump into some of the charts that you have for us.
Awesome. Yeah. Okay. So I think if you go to slides like 4 and 5, it's just kind of like, you know, slide 4 is kind of just this market structure thing that I mentioned before, where, you know, the Athena peg on centralized exchanges got smoked, whereas, like, on Chainlink, it stayed flat. And then if you go to slide 5, you can see the decentralized to centralized trading volume, you know, kind of like in a nice, you know, relatively healthy kind of trend, you know, positive trend. And then on Perps volumes is, you know, obviously massive with the emergence of Hyperliquid. So, you know, October was better than September for both. So nice volume months. And then, like, you know, the positive trends in both kind of continued on. Now, you could say that, like, there was a lot of volume in September because of the or October because of the pullback, and actually, you know, absent that, you'd have had a more of a rollover. Hard to say, but, like, ultimately, you know, you do see a little bit more activity on decentralized venues than you do on centralized venues, and there probably is a transparency angle there. You know, we'll see. Like, I'm not knocking centralized venues. It's just that it's an interesting trend, and I think that one that was kind of you know, emphasized in that downturn. So something that I think is pretty meaningful. Now, zooming out further, you know, I think if you go to slide 7, this was a really cool one, I thought, and it's like mentions of stable coins by S&P 500 financial companies. So we're pretty much done financial reporting for Q3, and so I thought it was really interesting to see, like, you know, out of the S&P 500 companies, you'd expect Coinbase to mention stablecoins the most. And of course, that had been true for most of, you know, through kind of 2024. And then in 2025, you had this real, like, huge ramp. And then, you know, it's like a hockey stick growth. You know, to your point, like, or to kind of some of the things we were talking about since the beginning of the call, it's like, this is pretty bullish. Why isn't price following? It's like, well, we're still pretty close to all-time highs, and this doesn't necessarily flow directly into tokens. And so I think a lot of the time people feel bearish because their token price isn't going up. Meanwhile, you see these bullish kind of trends. And I think, if you're sitting at a stablecoin issuer today, and your token price may not necessarily be going up, but your revenues sure are, and you feel like you're in a raging bull market. And I think that's emphasized here. And I think that there are read-throughs to the broader crypto market there. But it's just not necessarily translating into token price appreciation, which we'll talk about a bit more. But anything you want to say about this one?
Well, you mentioned Coinbase and the mentioning of stablecoin. I don't know if you saw the earnings call with Brian and how he said at the very end, it's like, oh yeah, and by the way, just want to make sure I get these words in, because apparently somewhere in the prediction market, it had like blockchain, Web3, staking, and he made sure he got them in. So that way, technically, he included those words in the earnings call. So I think this was the very first time that in a earnings call that somebody took the prediction markets into consideration, which I thought was kind of historical in a way. Like, it kind of goes to show you how large and mainstream prediction markets are becoming.
At least overtly, yeah. Like he called it out like overtly. Who knows if maybe the people have been playing the prediction markets on the side and then mentioning stuff quietly. But I don't know. Like we'll see. I'm just being cheeky. Yeah, I mean, we can jump forward. Actually, I have that chart in here too. If you go down to slide 18, since we're on the prediction markets, you can see prediction market volume there for Polymarket and Kalshi. Like, looking the hockey stick just as much as stablecoin mentions is. So really, really powerful. I do believe that some of this activity is people farming for eventual tokens or airdrops or whatever else, as there's been some mention that these tokens could be forthcoming. But I think a lot of this is just, real organic volume too, right? I think people like, betting on outcomes has been part of like the vernacular for so long, right? Like, oh, I bet you this, or whatever else. And so I think to the extent that there's a user experience that's pretty easy, and you're able to put your money where your mouth is, so to speak, on various different events, people like it, and it's something that people who are already online are looking to do a lot of, as evidenced by this. I think there had been a lot of conversation around like, oh well, this is all election market cycle driven or whatever else. But I mean, we're clearly bucking that trend right now, as more and more stuff goes on there. And I can say, from my kind of lens into the venture market, that there's a lot of really cool kind of like second derivatives of this kind of stuff that are being planned in the background. I'm not going to out anybody, but some really fascinating kind of attempts at trying to evolve or innovate on even just the polymarket and Kalshi models.
I haven't been on Robinhood in some time. And the other night I was sitting around and said, you know what, let me check out my account. And I went on there and I started browsing and I saw that they had basketball games on there. Like, I felt like I was logging into a fantasy sports application. So you're starting to see this convergence between just like the sports culture, like finance, like all coming together. It's kind of interesting.
Yeah. Well, I used to work on a trading desk and people love talking about sports and betting on sports and all that kind of stuff too, right? It's like, I think it kind of appeals to a certain group of people. Maybe these are the same kind of folks who like to trade markets and stuff like that too, or probably a bit broader than that. I think like there's definitely people I know who love like fantasy football who don't care the stock market, for sure. So I think it makes a lot of sense. I think Robinhood is a leader with their user experience. Like they're famous for their UI, and their ability to ship fast. And I think that they've got a pretty good handle on what their users want. Notwithstanding some of the controversies that have kind of been around them in the past, but like, they build quick. They seem to, listen to their audience and then provide that functionality. And they, I think, without like, I don't know much about it, but it seems like they're pretty, they're innovating with respect to like, pushing boundaries, with respect to, what's what's allowed to do. They, seem to be engaging with regulators along those lines as well. Maybe more so now because it's an easier conversation. But yeah, I think they have a certain lens on. There's a pretty good podcast actually, like Cheeky Pint with forget which Collison brother, one of the Collison brothers, and Vlad from Robinhood. That's a pretty good little watch. I think it's interesting to see how they, to get a history around what they've done in the past and like how they think about things going forward. And um, you know, admittedly that aligns with my own kind of lens of the world and financialization and improving user experience within financial services.
Good to know. Yeah, I'll have to check that podcast out. Sebastian, anything else that you think is worth highlighting here in your slides?
Yeah, I know we've been talking for a while, but like going back to that stablecoin and banks transact or conversation. If you go to slide 8, this isn't necessarily related to stablecoins today, but Zelle is owned by a consortium called Early Warning Systems, but mostly that's like Bank of America, so they consolidate and report it. And like you can go back over the quarters and look at these trends that they have, but like Zelle is like dominating cash and check transactions, and the peer-to-peer volumes and number of transactions are secular growth. They've announced that they're going to allow international payments now, and that's going to be supported by stable coins. So again, Bank of America has hinted at like being kind of crypto friendly, seeing the opportunity there, and now they're kind of leaning in with their digital app first. That's a nice healthy chunk of volume and a potential, maybe people don't know that they're using crypto right away, but like that's another kind of another win for the ecosystem as far as I'm concerned. And I think the bank executives are cautious. So for them to go and do something like this is because I don't think they're planning to reverse that action. They'll probably start small and maybe they would reverse action if they had to, but like most likely if they make an announcement like that, they're looking to they see the value in it, and then they're going to do it for a long term. Um, Related to that are the next two slides, 9 and 10, and actually those were also kind of relate to my point around token prices. Like we'll talk about this one now, and we'll kind of come back to it afterwards. But like EtherFi's neobank with their cash card and then the cashback rewards is like, man, awesome. What a cool win for the industry. Full disclosure, I'm a user of the product. I like it. I think it's fantastic. I think that they're doing a lot of really cool experimentation within there too. Like the other day, I got like notified like, hey, you've got ETH in here or wrapped ETH. Maybe you want to like convert it into some like liquid staked version and then like earn on it. That'll help offset against your borrow costs or whatever else. And I was like, whoa, that's super cool. Like I'm a lazy user. I knew about this, but I wanted to sign up just for as an experiment, and just to try to like see what it would be like as an off ramp, and then to see that experience. I'm like, impressive, and I know they make pretty impressive revenue as well, and I think that there's something really to be said about that. And then on slide 10, this is stablecoin supply, removing USDC and USDT. So, the main points here is that you've got PayPal growing, Global Dollar, which is Robinhood and others backed, and now USD1, which is World Liberty Fi, kind of coming from nowhere a year ago to now, really healthy kind of like volumes or supply there. And I think it's like, this intersection to me is just like so interesting between like traditional financial firms and then like Bank of America and their fintechs with respect to like PayPal and Robinhood and others, and then EtherFi. Like there's like this really cool realm of experimentation that's happening with respect to like user experience, and they're doing it in a compliant manner too, which of course is super important. But I just think it's really awesome. I mean, the banking system in Canada is fantastic. I mean, of course, it's got its issues like anything else, but like by and large, it's like a world leader. So we've got pretty good banking rails here, and then for me as a user to then encounter something like EtherFi and have it like provide like pretty meaningful benefits as a crypto user as well. So I appreciate that I'm like a small segment, but nevertheless, like that to have a user experience benefit as a person who's already kind of like spoiled by having really good banking fees, like just imagine the rest of the world, right? Like these things are gonna, I think, really just, you know, skyrocket. So I
Mhm.
think those are some trends that I think are really fascinating, that kind of underpin my view of like why I think we're not in a, you know, in a bear market per se. I mean, I don't know what prices are going to do in the short term, but like things are pretty good in crypto right now. Lastly, you know, go to slide 13. You know, there's real businesses that are built here. $100 million, you know, monthly revenue type of projects that are, you know, that you know, like like the, you know, regardless of whether things are going to go down for a couple months here or there, my perspective on things tends to be a little bit more zoomed out. Of course, I'm not going to be you know, trying to like leverage long or whatever else, or like call tops and bottoms necessarily, but I just doesn't really feel like things are setting up for something bearish. We just had a huge market liquidation. Revenues are really strong in the ecosystem. You've got this tailwind of you know, secular adoption kind of coming. I think, you know, if we get this Clarity Act passed in the U.S., like, you know, I think you really kind of unlock this secular trend, and you know, people are building and have built real businesses using blockchain rails and continue to do so. And I think that's kind of you know, something that interests me more than anything else. And then switching to slides 16 and 17, you see like RWAs on Solana up and to the right. That's part of another part of the story that people who download the charts can kind of read and see where I'm going with that one. But nevertheless, like RWAs increasing, and then actually we had our first $1 billion uh, private credit fund on chain too. So the Janus Henderson collateralized loan obligation fund is over $1 billion represented on chain. So you know, some pretty meaningful headwinds or tailwinds there within the space that, you know, regardless of prices are down 10% or whatever else here or there, like to me those are more lasting trends that I think will support the industry's growth.
Amazing. It's always good to have the data to support the positive stories versus just, you know, having hopium. So, you know, amidst all of the chaos and people feeling down, it's good to look at the data and have confidence that, look, this industry is here to stay. You know, the data supports it. So, Sebastian, always appreciate you sharing all of these. Any last minute other points that you'd like to make?
I'd encourage people to download the charts, have a look through, and then, you know, kind of get some of the other additional details that you know are included. And you know, my contact information's in there, so people can always like reach out with questions or you know, comments or whatever else. And you know, like anyone else, I'm learning as I go. So I always encourage you know, feedback, and you know, I'm always happy to you know, kick ideas around with people too. So just like yourself. And so yeah, no, I think we can leave it there and then pick it up again next month. You know, I don't know where prices are going to be, but I would be pretty confident that there will be a lot of like the secular trends that will be continuing on.
Good place to end it there. Thank you, Sebastian. Yeah. And then for those that are watching, please give Sebastian a follow. I'll include all the links in the description. And if you found this informative, please show some support, show some love to Sebastian, like the video, comment down below which slide was your favorite slide. And yeah, check out his reports for sure. Until next time, thanks so much, Sebastian. If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.